Good morning and welcome to this webinar. Today we are going to be talking about the practical implications when an FSP is collecting premiums. And we're obviously going to be talking from an insurance perspective. And with me in the studio today, I have colleagues representing both the micro institutions and the insurance environment. So we're going to be talking from a micro, a long-term and a short-term insurance perspective when we are responding to the questions. And we'll also talk from a FAIS perspective. So what does an FSP and an insurance company have to keep in mind from a practical perspective when they are dealing with premium collections? And the questions that we are dealing with today are based on the questions that we receive. So this is really a frequently asked questions session. I'm going to be introducing my colleagues as we get to questions that they will respond to. My name is Charene Nortier, and I will be dealing with issues from a FAIS perspective. We are all in the Conduct of Business Supervision division at the FSCA, and I always have to slow down because that's a mouthful to say. So thank you so much for watching this, and I hope that you will find value out of it. And remember, if you forget anything, you're more than welcome to watch the video again. Without any further ado, let me kickstart the process and deal with some of the questions that we often get from a FAIS perspective. One of the first questions that FSPs ask us is, do they have to hold insurance cover when they are collecting premiums? The short answer is yes. All FSPs are required to hold professional indemnity cover, but that has nothing to do with the fact that they are collecting premiums. That is just a general requirement that applies to all FSPs. The only FSPs that are exempted from that are the FSPs that only deal with funeral assistance business policies. So they are authorized only for 1.1 and or 1.19, the Friendly Society benefits. They are exempted. All other FSPs have to hold professional indemnity cover. The additional cover that must be held is fidelity insurance. So when an FSP is collecting premiums, they are then also required to hold fidelity insurance. And that applies to all FSPs that collect for long-term insurance, again, excluding the FSPs that only provide insurance premium collection services for 1.1 and or 1.19. There is an exemption that is still valid for them. But FSPs who do more than that are required to hold fidelity insurance cover. There is an exemption for FSPs that only collect short-term insurance as a result of the exemption that was published after the IGF insurance fell away. In the webinar that we had, and that is available, where we talk about the legal implications for premium collection, we actually deal with that requirement in quite a bit of detail. So I would suggest that FSPs who are interested in understanding the finer detail around that, go and watch the video for the legal implications on premium collection. The second question that we often get asked from FSPs is, what documents must I submit with my annual financial statements when I collect premiums? So that is very simple. In terms of Section 19 of the FAIS Act, where we put the requirements for annual financial statements, Section 19(3) deals with the additional audit that has to be done on all bank accounts that are used for premium collection by FSPs. We require a Section 19(3) report for every single bank account that is used for the purpose of premium collection or when assets are held on behalf of clients or product providers. So if you have only one bank account which you use for that purpose, then we need one Section 19(3) report. If you have 10 separate bank accounts that you use for premium collection, we need 10 separate 19(3) reports. 19(3) report refers to the section in the Act, and it then also is accompanied by a prescribed format, which we have published on our website that auditors and accountants must use when they prepare the Section 19(3) reports. And the purpose of the Section 19(3) report is so that we have satisfaction that FSPs are not commingling the operational money of the FSP and the money that belongs to clients or product providers. That money is not supposed to be intermingled. It has to be kept separate at all times, and that assurance or information on that it was not done properly is then covered by the Section 19(3) report. The last FAIS question that I want to address before we go into the insurance questions is, foreign FSPs. What must the foreign FSP submit if they collect premiums? So foreign FSPs are exempted in terms of Board Notice 166 of 2011, but it is a limited exemption. So they are not exempted from submitting proof and financial statements. They are just exempted from the format. So they don't have to provide a format that is exactly the same as the format that is used for a South African FSP. And the format doesn't have to be exactly the same as the format used by a South African auditor or accountant, but it has to be drawn up by an accountant or auditor in the local jurisdiction of the foreign FSP, must meet the requirements of the local jurisdiction, and must still provide sufficient detail that we can get the assurance that all of the requirements that we hold an FSP against was actually addressed in the audit that was performed, and that we can see the assurance that the same principles and practices were adhered to by the foreign FSP. So again, if there is an FSP that now sit here and think, but I am a foreign FSP and I'm not 100% sure how to deal with this, we would be very happy to assist that FSP on an individual basis. Every FSP has a dedicated analyst who looks at them from a portfolio management perspective. You can see who your dedicated analyst is if you log on via the e-portal. The FSP's key individuals and compliance officers have access to the FSP's details on e-portal. You could also contact our call center, and they would be able to tell you who the dedicated analyst is, and the dedicated analyst will then happily take you through the requirements as it applies to your specific scenario. So I think from a FAIS perspective, I've said quite a lot. So let's go over to the insurance perspective, and I'm going to ask my colleague Juanita the first insurance related question. And that is, Juanita, we hear a lot around the deeming provision. Could you expand a little bit about the deeming provision? What is it and who does it apply to?
Thank you, Charene. Morning or afternoon, depending on when you're watching this, everyone. I'm Juanita Smit, and I'm a manager in the Conduct of Business Supervision Division with Charene, but I particularly look after insurers that fall within my team's responsibility. The deeming provision is actually exactly what it says. So basically it means when an insurer has authorized an intermediary to collect premiums on its behalf, it is deemed that the insurer received that premium the moment that that authorized FSP received the premium. Whether the premium is paid over to the insurer yet or not, or still with the FSP, it is the same moment that it is deemed that insurer actually received the premium. So it can't affect the policyholder or anything that has to do with the claim on the policy if the premium is received and it is with the FSP but not with the insurer yet. So that is basically what the deeming provision provides for. It's applicable to long-term and short-term insurance, or life or non-life, like we call it today. And yes, it's basically the insurer that needs to authorize this FSP to collect on its behalf.
Thank you, Juanita. And you've also made it very clear that the deeming provision applies to both the life and the non-life. And my apologies, I'm also still used to talk about short-term and long-term insurance, and we all have to get used to the fact that it's life and non-life now. So if I make a mistake again, please, I apologize in advance. Forgive me for that. Is there anything else in the life and non-life environment that people have to remember around the deeming provision's applicability?
Well, Charene, I think the most important thing is that giving, from an insurer's point of view, giving this authorization to an FSP to collect premiums is a big responsibility. So it shouldn't just be given out easily. An insurer has the responsibility to look at whether this FSP really has the infrastructure, the organization, to really be able to deal with the premiums, to recon on the premiums. that they also have a good track record, that they will be paying over the premiums, that they have the necessary governance structures that they need to do. And like you mentioned earlier, that they have either a fidelity or a guarantee in place for if anything goes wrong. Because if anything does go wrong with the FSP, it is still the insurer that needs to step in. So it shouldn't be something that is lightly given to any FSP by any insurer when it comes to the collection of premiums.
Juanita, thank you. And I think you've just made a really important point, and that is that the insurer has a big responsibility when they give the power to collect premiums on its behalf to an FSP. It is not something that must just be lightly done. There is a proper due diligence process that should be followed. I think not just upfront, but also maybe on a continuous basis.
No, definitely. I mean, ongoing monitoring is one of the things that we speak to insurers about the most when it comes to any of the functions that you give to another entity to perform on your behalf. And I think we've learned from the past that premium collection is very important, and it can really hurt an insurer, even a bigger insurer. And what insurers need to realize is you're responsible for those claims. If those claims come in and the premiums weren't paid over to you, but it was received by the FSP, you are the responsible party. And recovering it and how long it takes to recover it is it's up to the insurer. The policyholder can't have any detrimental effect because you as the insurer decided to give it to an entity. An entity's situation and their systems and their governance and their infrastructure change over time. Therefore, you have to be sure that you have a very strong monitoring process after the onboarding, and that you also make sure that there isn't a knit one, slip one type of situation, or the information is not what it needs to be, because you also need to meet the data requirements. So the FSP collecting for you must also be able to give you all the information that you need to have on those policyholders to continue actually if something had to happen. And that's how you have to see it, and that's how serious it is, because you remain responsible.
Juanita, I couldn't agree with you more. We see it when it is well managed, and we also unfortunately see it when there are mishaps. And quite often by the time that the regulator gets involved, there's already a series of knit ones, slipped ones, and more slips than knits. If that makes any sense. And then often it's a very tricky situation to resolve, at the same time making sure that customers are treated fairly, because the customers were doing what they were supposed to be doing. They were paying the monthly dues as they became due. The premiums were paid in whatever format. And now they have a valid claim and a valid expectation that that claim is going to be honoured. And that's what makes this so important, both from an insurance perspective and from an FSP perspective. On that very important note, Lehlogonolo, could I ask you, what agreements are required between the intermediary and the insurance company to collect premiums, so that we know that this is a valid agreement and that due diligence was actually conducted?
Thank you so much, Charene, and I'd like to greet all the viewers that are watching the recording. So my name is Lehlogonolo Chuenyane. I'm from the Micro and Access Product Institutions Department. We look after insurers who offer the funeral class of business. So in terms of the collection of premiums, there would need to be an intermediary agreement entered into between the insurer and the respective FSP. And that particular intermediary agreement would govern the relationship between the two parties, meaning the insurer and the FSP involved, and also the remuneration structures under the agreement would be governed in terms of that intermediary agreement, because you would find that there would be a commission that is payable and due to the intermediary for rendering financial services on behalf of the insurer. And that commission payment structure would also be provided for in terms of the intermediary agreement entered into by the respective parties.
Thank you. And that's important, the level of detail that has to be included in the intermediary agreement, because that is what says what may be done and what may not be done. And that is what we look after when we are then asked to intervene in a situation. And we also look at it just as a matter of course as part of our regular ongoing supervision requirements. But carrying on with this whole intermediary agreement process, can an insurance company authorize more than one intermediary to collect premiums in respect of the same policy at the same time?
Yes, Charene. So coming to that question, the regulations under the Insurance Act, the Long-Term Insurance Act, do allow for more than one intermediary to collect premiums in terms of the same policy. And there is also a requirement that those premiums must be paid within 15 days after the end of the month to the respective insurer.
So that means that if the insurance company collected the premiums on the 5th of the month, by the 15th of the next month, that premiums have to be paid over to the insurance company.
Yes, so 15 days after the end of the month, the premiums must be paid over to the insurer.
Okay. And that's important. So there are time limits that have to be adhered to, and that's part of the reporting. And Juanita referred to the data management earlier as well. So that forms part of that data management set of information that has to be provided from the intermediary to the insurer and has to be checked by the insurer. So there's quite a lot of admin involved in premium collection. Lehlogonolo, if I could continue. We've talked about the premium collections. Can I just check, is this collected in the or reported on in the bordereau? Because we often hear the bordereau. Is that where the bordereau fits in?
Yes, so Charene, that is correct. That is where the bordereau fits in. So the expectation is that once the FSP has collected premiums, they would need to remit a bordereau to the insurer just to give an indication of the number of clients that have paid their premiums against the amount of premiums that is paid. So meaning that there would have to be a reconciliation process that takes place so that any missed premiums can be identified and so that the policyholders or the members under a group scheme can be notified accordingly if there is a missed premium. So insurers do rely on this bordereau as well as the premium reconciliation in order to identify who has paid and who has not paid so that missed premiums notifications can be sent accordingly to the policyholders out there.
Excellent. Thank you very much. Vanasa, can I ask you to explain to us how intermediaries are remunerated when they are collecting premiums? So how does this work? What is allowed? What is not allowed?
Yes, thank you, Charene. Hello to everyone. My name is Vanasa Padayachee, and I'm from the Conduct of Business Supervision team and responsible for the oversight of insurance companies. So Charene, if the intermediary sells on behalf of the insurer, they have an intermediary agreement in place with the insurer, and they are remunerated by way of commission. Otherwise, there could potentially be an outsource fee that's paid. And this is in instances specifically where the intermediary is only collecting premiums on behalf of the insurer, and they comply with the requirements for the direct collection of premiums. So this is I would say, the new age that we want to move towards. We want to be in a situation where the premium goes directly to the insurer, because we have seen instances of risk arise where the premium sits too long and is not in the account of the insurer. So, and as much as a regulator, we want to move towards this, there needs to be very stringent governance requirements in place, and only intermediaries that comply with those governance requirements will have that facility to be able to be paid an outsource fee by the insurer.
Thank you. That makes a lot of sense. We've mentioned data a number of times already, but could you expand a little bit more on the data for us? What data must be provided, and in terms of what sections of the legislation is that governed?
Thanks, Charene. So the requirements are contained in Rule 13 of the Policyholder Protection Rules to both the Short and the Long-Term Insurance Acts. And they speak to the insurer having access to data that enables it to properly identify, assess, measure, and manage the conduct of business risks associated with the insurance business, and to ensure the ongoing monitoring and the consistent delivery of the fair outcomes to policyholders. So an insurer must, at a minimum, have access to the names, the identity numbers, and the contact details of all of the policyholders. There's an intermediary agreement in place between the parties, and the insurer would need to stipulate in the intermediary agreement exactly what data it would need the FSP to share with it in order to measure, monitor, and manage those conduct risks.
Thank you. That helps a lot. And again, the importance of that intermediary agreement is highlighted. It contains not only the agreement that you're allowed to do this on my behalf, but also how much you're allowed to do and what do I expect to see that you've done it properly. To put it in very simple layman's terms. I know the lawyers makes it much more complicated, but that really is the gist of it. What are you allowed to do? What are you not allowed to do? What do I need to see to check that this was done properly, that you've not mismanaged the premiums and the payments of the clients, and also which clients are actually on risk because they're up to date. Carrying on with this is, what is an FSP, an intermediary, allowed to subtract from the premiums that they've collected, or are they allowed to subtract any money before they pay over to the insurance company? What are the limitations?
Thanks, Charene. So the commission can be subtracted before paying the premiums to the insurer, and that is provided that it is within the boundaries of the agreement between the insurer and the intermediary.
Thank you very much. So just to confirm, they're only allowed to subtract the commission if that was agreed to in the intermediary agreement.
Yes, correct, Charene.
So that is something to really look out for. So insurance companies, I hope you're taking note. Marrelie, can I ask you some questions, please? If a policy is in arrears as a result of missed premiums, what happens? Are there any repercussions?
Good day, Charene and everyone. I just want to mention I'm also from the Insurer and Retirement Fund Benefit Administrator Supervision Department, but my job is also to look after the supervision of insurers. Charene, when it comes to the missed payment of premiums, the insurer must notify the policyholder of the missed premiums and when it will deduct that missed premium. Also, the exact amount that will be deducted. The insurer must also inform the policyholder of the consequences of another missed premium. That must be explained to the policyholder. And I think it's important that this because different insurers actually handle this in different ways. In some instances, they're willing to negotiate a specific date within that 15 days on which they will do the deduction of the premium that wasn't paid. Or some insurers do a double deduction the following month. And this must be very clear to the policyholder to make sure that they have the funds in their account so that this premium is successfully deducted. And another thing is this must also be explained in the policy wording to the policyholder.
Thanks, Marrelie. I sometimes hear the term grace period. Is this something that applies in this environment?
It does, Charene. It's the minimum period within which an insurer must try and collect the missed premium. In the Long-Term Insurance Act, we prescribe 15 days for this collection. Basically, the long-term insurer doesn't have a choice. This means that they need to notify, like I said, the policyholder of the missed payment and try to collect again within those 15 days. The policy will stay in force in this grace period. And it is also important that they process a pending claim in this period and that the grace period and the collection of the premium that wasn't paid doesn't cause any delays for the policyholder. I must say, like I did, most insurers do prefer double debit order the following month, but you have to be sure from a policyholder perspective what is expected from you.
And I think what is important there then is that the FSP must also make very sure that they explain this to the clients in language that the clients understand. One of the things that we see in the TCF principles is the whole concept of plain language and making a concept that is not necessarily familiar to the clients accessible to them. So explain it in terms that the client will understand and also take the client situation into account when you make arrangements. But don't promise things that the insurer isn't willing to adhere to. So you must first of all check with the insurance company and then make sure that you translate that into language that makes sense to the client.
Maybe I could just add, Charene, I think it's important for the insurer and the intermediary to really take into account the type of policyholder and the policy that they have in place, depending on the financial profile of the policyholder. It's so much more important for someone who doesn't earn a big income to make sure that the funds are available for a deduction.
Absolutely, especially if it's debit orders and not cash collections, because on debit orders, we all know that there are additional bank charges with failed debit orders, and you don't want to put an already vulnerable person into a situation where they are even more constricted financially. So it's also just looking after who your clients are, and knowledge of the client base is very important. Agree with you 100%. Thank you so much. Louisa, last but certainly not least, could I ask you, is an FSP allowed to add interest to a premium payment?
Thanks, Charene. Greetings to everyone. My name is Louisa Basitere. I'm also from Conduct of Business Division, and I'm also responsible for the supervision of insurers. So, Charene, the short answer to your question is no. Neither the insurer nor the FSP may offer or receive any other consideration other than commission or other types of remuneration that are provided for in the legislation.
Louisa, thank you. And I think you've already answered my next question, but just for clarity's sake, I'm just going to ask. So this also means that the FSP and the insurance company are not allowed to tack on extra fees or charges to the premium. They are only allowed to recover the premium itself.
That is correct, Charene. And if I can give an example, particularly in the funeral space, we see things like joining fees, you know, where the policyholder would be charged the joining fee when they take on the policy. It's also something that is not allowed in terms of the legislation, because nothing should be added to the premium, you know. The only thing that may also be taken off is commission, as we've discussed earlier, and it's the kind of practice that we really frown upon. It's the kind of practice that we really do not encourage.
Thank you so much. And I have to say to all of my colleagues, I really appreciate your time. The take out of today is that there are very strong rules and requirements around premium collection, and those rules and requirements apply equally to the insurance companies and to the FSPs. And it's important that FSPs and insurance companies must be clear about what A, the legislation allows them to do and the restrictions of the legislation, and B, that they've got to make sure that the intermediary agreements that they enter into are aligned to the legislative restrictions. And then the third thing that they've got to be aware of is that the practice on the ground must then support this. We can't have something that is being done in practical terms that is completely different to what the legislation allows them to do. And you also can't contract yourself out of the legislative requirements. So you can't go and say, but I have a contract. If your contract is not aligned to the legislation, you are still not allowed to do it. You may have done it, but legally speaking, you were then in contravention of one of the pieces of legislation. We have very good requirements, both in the FAIS environment as well as in the long term, the short term, and in the micro environment, the life, the non-life, and the micro. Let me get my terminology right. If I practice enough, I'll get it, ladies, I promise. But there are requirements, and the takeout for you today really is, please play by the rules. If you stick to the rule book, you should be able to run a very successful, very clean business. If you don't stick to the rule book, as the regulator, at some stage or another, we're going to get involved. Because it invariably happens that either we pick it up as part of our routine ongoing supervision, or we get complaints, we investigate the complaints, and we then pick up that the rules were not adhered to. And it's inevitable that the rules were not adhered to, and that's why we then sit with drama, if there is drama in this environment. And this is the one environment where it's not a soapy on TV. We would really like this to be as drama-free as possible. And if you're not sure about something, we are all approachable, we are all available, and we would far rather that you contact us up front and say, we're envisaging doing A, B, and C with this company. If we approach it in this way, would it be acceptable, or is there something that we should be aware of? It's much easier to solve the problems right up front than to try and solve it 6 months, 9 months, or 2 years down the line when there's already been quite a lot of mishaps, and we then have to try and pick it up and make sure that the clients have not been placed in an unenviable position. So thank you again so much for your time. I really appreciate it. And to everyone watching this, we have a series of webinars available. We try to be as practical as possible in our webinars, and we really invite you to watch them. They are aimed at different audiences. We hope that you will find them valuable. Thank you so much.